You do not need to lend your own money to start an equipment finance brokerage. You help business owners find financing for the equipment they need, connect them with the right lender, and guide the deal from application to closing. In this video, I'll show you the 5 steps to start and the first mistake most beginners make. An equipment finance broker sits between a business owner and a financing company. The business owner may need a truck, trailer, excavator, restaurant oven, medical machine, or other equipment. But they may not know which lender to contact, what documents are required, whether they qualify, how to structure the request, or how to compare financing options. That is where the broker adds value. You are not simply sending a form and hoping someone approves it. Your job is to understand the client's situation, organize the information, find an appropriate financing source, and keep the process moving. The first step is choosing who you want to serve. A beginner may be tempted to say, "I finance every type of business." That sounds impressive, but it makes marketing much harder. Instead, start with 1 or 2 customer groups. For example, trucking companies, construction contractors, landscaping companies, medical practices, restaurants, manufacturing companies, or transportation businesses. Why does this matter? Because a trucking company has different equipment, documents, and financing needs than a medical practice. When you understand one customer group, you can create better content, ask better questions, and build better relationships with equipment dealers. Start narrow. You can expand later. Here is a simple question to help you choose. Which type of business do you already understand or have the easiest access to? That is usually the best place to begin. Before trying to close deals, you need to understand the basic structure of equipment financing. The main parties are usually the business owner, the equipment seller, the finance company, and the equipment finance broker. The client wants equipment. The seller wants to get paid. The lender wants to approve a deal that fits its guidelines, and the broker helps coordinate the transaction. You should understand the difference between common options such as equipment loans, equipment leases, working capital loans, sale and leaseback transactions, and vendor financing programs. You do not need to become an expert in every product on day 1, but you do need to explain the basic options clearly and avoid making promises you cannot guarantee. Never tell a client, "You are definitely approved," before the lender has made that decision. A better phrase is, "Based on the information you provided, this may fit certain lender programs. The lender will make the final approval decision." That protects your credibility and sets the right expectation. Your next step is building relationships with financing sources. Different lenders specialize in different situations. One lender may prefer newer businesses. Another may focus on construction equipment. Another may work better with strong credit borrowers. A different lender may consider more challenging credit profiles. Your goal is not to collect random lender names. Your goal is to understand what types of deals they fund, their preferred industries, their equipment limits, their documentation requirements, their credit guidelines, and how they communicate with brokers. Start by making a simple lender spreadsheet. Include the lender name, contact person, preferred deal type, industries served, minimum requirements, and notes from every conversation. A strong lender relationship can help you submit cleaner applications and avoid wasting time sending the wrong deal to the wrong place. Now let's talk about finding deals. Your first clients may come from equipment dealers, truck dealerships, construction equipment sellers, accountants, business consultants, insurance agents, local business owners, or your existing professional network. Equipment vendors can be especially valuable because they already speak with people who are actively shopping for equipment. A vendor may have a customer who wants to buy but needs financing before the transaction can move forward. That creates an opportunity for you to help both sides. When contacting a potential referral partner, do not lead with a complicated pitch. Keep it simple. "I help business owners find equipment financing and make the application process easier. If one of your customers needs financing, I can help organize the request and connect them with appropriate lenders." You are not promising approval. You are offering to make the process easier. The key is consistency. One message rarely creates a partnership. Build a list of potential referral partners and follow up professionally. Now let's talk about packaging a clean application. A clean application gives the lender the information needed to make a decision. The exact requirements vary, but you may need information such as the business name and ownership details, time in business, equipment type and cost, seller or vendor information, a purchase invoice or quote, bank statements, credit information, financial statements, and business and personal identification documents. Your job is to collect accurate information, check that the application is complete, and submit it in an organized way. Before sending a deal, review it from the lender's perspective. Are the numbers consistent? Is the equipment clearly identified? Does the requested amount match the invoice? Are required documents missing? Is there anything that needs explanation? This step can separate a professional broker from someone who simply forwards incomplete paperwork. Here is a simple first-month plan. Days 1 through 7. Learn. Study the basic financing products, the types of equipment being financed, and the customer group you want to serve. Days 8 through 14. Build relationships. Contact lenders, equipment dealers, accountants, and other potential referral partners. Your goal is to start conversations, not to close everyone immediately. Days 15 through 21. Create your process. Build your client questionnaire, document checklist, lender spreadsheet, and follow-up system. Days 22 through 30. Start outreach. Contact potential clients and referral partners every business day. Track who you contacted, what they need, and when you should follow up. Do not wait until everything is perfect. Build a basic process, use it, and improve it as you learn. Before you start, avoid these common mistakes. First, do not promise approval or guaranteed income. Second, do not send every deal to every lender. Third, do not ignore documentation. Fourth, do not focus only on finding clients. Strong lender and vendor relationships matter too. And finally, do not change your target customer every week. Give one market enough time to learn what people need and where the best opportunities are. Starting an equipment finance brokerage is not about knowing everything on day one. It is about learning the financing process, choosing a clear customer group, building lender and vendor relationships, and creating a repeatable way to package deals. Start with one market, one basic process, and consistent outreach. In the next lesson, we'll cover the difference between a broker and a lender, and why understanding that difference is so important. Subscribe to Equipment Finance Academy so you do not miss it.